Okay, before we dive in, just a quick reminder, this content is for educational purposes only. It is not financial advice. All investing involves the risk of loss. All right, let's get right into it. Today, we are dissecting what I believe is one of the most profound dislocations between financial markets and physical reality in modern history. We're calling it the HORMUZ Illusion. Retail investors are buying the stock market at all-time highs because they believe the energy crisis is over, completely missing the physical catastrophe unfolding at sea. Today, we expose the HORMUZ illusion and why the smartest capital on Earth is using the paper piece as exit liquidity to hoard physical assets. So, to really understand what's going on, we have to start with the ground truth. We need to deconstruct what is actually happening on the water, far, far away from any trading screen. You know, the best way to think about this whole situation is like a restaurant. The paper market, that's the menu you're reading. It's got great prices, headline oil looks stable, you're hearing about ceasefire talks, everything looks fine, right? But the physical market, that's the kitchen. And when you walk into the kitchen, you realize the supply lines are totally severed, the pantry is empty, and there's literally no food to cook. This is the heart of the HORMUZ illusion. The price on the menu is a complete fantasy because the physical product simply cannot be delivered. And you need to understand this is not a temporary disruption. This is a new structural reality. The Strait of Hormuz has been permanently reorganized into what's called a dual corridor system. The northern route, that's now under the thumb of Iran's IRGC, and they are effectively taxing every single molecule that passes through. The southern corridor, along the Omani coast, is where the U.S. is running its own rival blockade, trying to intercept sanctioned ships. The result is just pure logistical chaos, forcing shippers to use so-called zombie ships and turn off their transponders just to sneak through. The consequences of this physical blockade are, well, they're staggering. The conflict immediately slashed exports by over 13 million barrels a day. But here's the number that really matters: the inventory draw. Global stockpiles outside the Gulf were drained by 205 million barrels in March alone. That is a liquidation of the entire world's safety net. The at-sea oil buffer, the cushion that keeps the entire system from seizing up, it's gone, evaporated. And this brings us to a point that is so critical, yet the paper markets are completely blind to it. Not all crude oil is the same. Light sweet crude, think WTI and Brent, that stuff mostly gives you gasoline. And yeah, it looks oversupplied on paper. But the global industrial economy, the trucks, the ships, the planes, that all runs on diesel and jet fuel. And those products come from heavy sour crude like Dubai and Maya. And guess what? That is the exact type of oil being physically blockaded, leading to an acute, and I mean acute, physical scarcity. So what's the direct result? A 36% surge in diesel prices. And let's be clear, this is not speculation. This is a direct pass-through cost from the physical world. Every single thing that gets moved on a truck, a train, or a ship just got a whole lot more expensive, injecting this massive inflationary impulse right into the arteries of the supply chain. But the shockwaves don't stop at fuel. Not even close. About a third of the world's entire seaborne fertilizer trade goes through the Strait of Hormuz. That supply chain is now shattered, creating a ticking time bomb for global food supply. And maybe even more urgent is this: 30 to 38% of the global helium supply comes from Qatar, and Hormuz is its only way out. And helium, it is absolutely non-substitutable for making high-end semiconductors. So think about what this really means. South Korea's chip giants, Samsung and SK Hynix, get about 65% of their helium from Qatar. Right now, they're running on a roughly 6-month supply buffer. Once that's gone, the entire global AI build-out slams into a physical wall. A wall that no amount of money printing from a central bank can solve. The production of our most advanced technology now depends on a gas that is physically trapped behind a naval blockade. This whole situation, this physical reality, has created a massive information gap, a huge asymmetry between what the public markets are seeing and what institutional capital is actually doing behind the scenes. See, the smartest money isn't trading on public exchanges where you and I can see it. They're executing in dark pools. These are private venues where huge institutions can move enormous blocks of capital without tipping off the high-frequency algorithms. This is where the real signals are flashing. And the signals in these two worlds could not be more different. Public markets, they're all focused on eventual Fed rate cuts, looking at backward-looking inflation data. They're chasing what are basically phantom returns in stocks. But inside the dark pools, the big players are tracking real-time physical data. the surging cost of inputs, the logistics managers index showing transport capacity collapsing, they see a structural, accelerating inflation that the public is completely missing. And therefore, they are acting on this asymmetry. We are in the middle of a massive, stealthy rotation of capital. Where big money used to pour into grid-connected projects, the playbook for the next couple of years has completely changed. Capital is now flooding into off-grid, physically secure AI infrastructure, and, critically, into nuclear energy sovereignty. This isn't some ESG play, it's a raw survival play. So why the sudden pivot? It's simple, really. AI's demand for power is so mind-bogglingly huge, it's actually breaking the public grid. Trying to connect a new data center can take years. So the hyperscalers, Google, Microsoft, Amazon, they're just bypassing the grid entirely. They are now directly funding their own 24/7 baseload power. And this has triggered a full-blown nuclear renaissance because it's the only reliable, carbon-free power source that can actually fuel these AI empires around the clock. Now let's zoom out, because this rotation isn't just some niche trend. It's a direct response to an inescapable macroeconomic reality. These micro-level disruptions are creating a macro-level stagflation trap. The causal chain here is brutally simple. First, a critical choke point gets blockaded. Second, physical input costs, energy, logistics, food, they all spike. Third, this kind of supply-side shock makes conventional monetary policy completely useless, which leads to the fourth and final step, an entrenched, ugly stagflationary environment, where you get slowing growth and persistent inflation at the same time. And it really all boils down to one simple truth. The Federal Reserve cannot fix a broken shipping lane with interest rate adjustments. Monetary policy is a hammer designed to manage demand. It is utterly powerless against a physical supply catastrophe. And the data is already screaming this at us. The Logistics Managers Index shows prices going up while capacity shrinks, all driven by this HORMUZ chaos. The Producer Price Index is climbing because of energy costs. Therefore, central bank policy is paralyzed. They're trapped. They're forced to keep rates higher for longer to fight an inflation they have no tools to control, which will ultimately crush the middle class while monopolies gain even more pricing power. And all of this brings us to a much deeper, more philosophical conclusion about the fragile nature of our globalized world. What we're witnessing here is what we call the HORMUZ arbitrage. It is a fundamental bet against a financial system that has become dangerously, fatally disconnected from physical reality. The market is mispricing the most critical assets in the world because it values digital pixels on a screen more than the physical molecules of energy and food that actually allow civilization to function. Which leaves us with one final sobering question to ponder. In a financial system where a fleet of cheap drones can hold the entire global economy hostage, what is the actual price of energy sovereignty? Hit the like button, subscribe to the channel, and drop a comment below with your thoughts on the HORMUZ arbitrage.